Hello everybody, welcome back to this video today. We're going to be talking about a sector that nobody is even talking about. So I want to shine the spotlight on this sector. As most of you would know, everyone's talking about 7 stocks right now in the S&P 500 that has seen, some substantial gains just lately in the last few months. You've got Tesla, Apple, Microsoft, Nvidia, just to name a few. And you've also got a lot of people talking about Bitcoin lately, with the BlackRock ETF filing for that spot Bitcoin ETF. Now I want to talk about this sector today, and this sector is the silver junior mining space. Now before you click on this video, I want to show you some charts that are just screaming a buy signal, right? So these silver junior mining stocks, these 3 ETFs that I'm going to talk about today, this chart right now that I've got up on the screen is the SILJ. Some of you would know this, most of you probably won't know about this. Now, we're trading at the same valuations as some of the cheapest points in history when silver was like screaming buy. So, the chart in front of you guys right now that you're looking at, we've been in a downtrend for essentially the last 3 years. So a lot of people have been shaken out. I've seen comments on Twitter, people are just fed and sick up of these penny dreadful stocks. They're losing a lot of money. They're just injecting cash into these things and they're just drilling dirt and they're not finding, any resources for that matter, right? Now, there is going to be a time to play these, and I do think there is going to be a slingshot type move to the upside here. As you can see, the previous 2 times before, very large moves to the upside and very quick as well. Catches a lot of people off guard, and I think the same is going to happen again. Now, if we jump straight into the charts here, you can see that the SILJ ETF, it bottomed back here in 2016. Silver had a 50% move to the upside, right? So silver rallied 50% from the lows. If you scroll back to silver, on the silver, just, you can use silver or SLV or whatever. You can say it's paper manipulated. But if you just have a look at the chart, it rallied 50%. But this ETF rallied 241% against physical silver bullion. So there is a time to own physical silver. Right now, that time has been correct for the last essentially 3+ years, right? Since around the March crash, it had that pop, and we've just, erased all them gains. But we are coming back to them same valuations. So what you're looking at here, guys, is the SILJ divided by silver. So you get a ratio chart. Now, this ratio chart, if you sold all your silver bullion into this ETF, you were essentially buying in at around 30%, right? So 30% of an ounce of silver got you 1 share in this ETF. It then rallied 241%, and you almost could get, for every 1 share you had in this ETF, you could buy 1 ounce of silver, right? It went up to around 98%. So you could almost buy yourself 1 whole ounce of silver with 1 share. Back in August of 2016, right? Fast forward till the next cycle that happened. This is exhibit number 2 that I want to talk about. So most of you would know we had a very large sell-off in the March 2020 crash. Most of you would know oil went to zero. Lots of other commodities, got hammered. Bitcoin as well went down to that $3,000 level, and silver went down to a whopping $11. Now it rallied out of that, that hole pretty quick and pretty fast, and it caught a lot of people off guard, and, it did the same here. Now, it didn't do as much as 2016, but nonetheless, it did rally 125% to the upside. So you can see here, in just around 3 months, from March 2020 to the high up here on 1st of July 2020, what's that? 1, 2, 3, 4, 5 months, and it rallied 125%. Now over here, it rallied 241% within 7 months. So very, very quick moves, you know, within less than a year essentially, and you know, it moves quite quick. So like I said before, silver price moved 50%. This ETF rallied against physical silver bullion 241%. Now silver went from $11 to $30 an ounce. This went up 125% against physical silver bullion, because remember, this is a ratio chart, guys. We're dividing the ETF price by physical, you know, paper silver price, whatever you want to call it, physical silver price. And for the last 3 years, we've just been in this downsloping channel, and we're essentially coming right into support here. So we could potentially go lower next month. I'm suspecting that could be the case. One more final flush down lower, and then we could have, you would want to watch for a break above this channel. If it breaks above this channel, I think you're going to get a very, very quick move to the upside. 8 times out of 10, these downsloping channels are bullish. When you have a parallel downsloping channel like this, more often than not, they do break to the upside. I do think that will be the case. By end of year, I'm going to make an update video on this, as I do think, you know, by end of year, 1st of January 2024, I do think we're going to be higher on this ratio chart rather than lower. Now, what I'm expecting is something similar to these prior cycles. We're going to get a very quick move to the upside. It's going to catch a lot of people off guard, like I mentioned before, as a lot of people are just throwing in the towel here. They're capitulating. They're giving up on these mining companies. Everyone's moving to exciting assets like Nvidia, Tesla, you know, Facebook, Microsoft, all these tech stocks, and Bitcoin. Everyone's flooding back into these exciting bling, 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 you know, stocks and crypto and stuff like that. Whatever's got a buzzword in it, that's what's trending. You've got, you know, stuff like AI, and no one's even batting an eye over to these, you know, silver junior mining companies. Now, that's where I get interested in having a look at something like this, because I'm assuming smart money is looking at something like this as well. I'm assuming they know that on a historical basis, this is just getting like super, super cheap. You know, you want to see retail people get flushed out. That's what's happening. People are throwing in the towels. They don't want to own any silver mining stocks, even gold mining stocks. If you guys like this video, get a few likes on this video. I'm going to make a part 2, and I'm going to talk about the ratio charts for gold versus the JDX and versus the GDXJ. There are many other ETFs that I could talk about as well. Leave some comments below what you guys think I should make next, but I just want to make a video about silver today. Now I want to show you some other things. So there's a few other ETFs, not just the SILJ. You've got the likes of the SIL, which is one of the largest silver mining ETFs, and then you've got an ETF here that's run by BlackRock called SLVP. It's somewhat similar to the SILJ, but when I look at these charts, guys, they're breaking down. So their ratio charts are breaking lower. As you can see, connecting the lows from 2016 through the March low, you can see we did slightly bounce in 1st of September when silver made that low as well, around $17. But you can see we are now going lower. Now, another thing to keep out of mind, guys, is silver bottomed around September at around $17, $18 of last year. But these silver junior mining ETFs have gone lower. So you've got a divergence, right? I would say that is a bullish divergence. So you have silver that's moving in one direction to the upside, whilst these ETFs are moving lower, right? Which are compiled of all these silver mining stocks. Now you've got the same here for SLVP. Connect the lows from 2016 through March 2020 low and the September low. You can see we are breaking down lower. But then when you look at the SILJ is showing a lot more strength than the other two ETFs. So I would personally be longing the SILJ rather than those other two ETFs, as this ratio chart is holding up a lot better than the other two that I mentioned before. So potentially, like I said, we could get down to around 39%, you know, so you need 39% of an ounce of silver to buy one share in this ETF. So to me, that is historically cheap when you look, at some of these levels, I don't think we're going to go as low as some of these levels, guys, because I had a look. The all-in cost to mine, ounces of silver, ounces of gold. I'll use gold for this example because I know it off the top of my head. The cost to mine an ounce of gold right now on average is around $1,350. It's up 45% over the last 3 years. So the all-in cost to produce an ounce of gold, once you dig it up out of the ground, you run it through the mills and everything, and you get the ounce of gold, it's costing more and more money. Now, why is that? So you've got the energy prices have been going higher. They have come in lately, but they are higher than they were 3 years ago. So the all-in cost to mine an ounce of gold is up 45% over the last 3 years from 2020 to now. Now, I do think that trend is set to continue, as you do have inflation is pretty sticky, and it is probably not going to go down to that 2% level like Jerome Powell is saying. I do think it is going to hold in pretty steady around this 4 to 3% range. I don't think it's going to fall as quick as it has been lately. Now, why is that? Because when people take a pay increase, they're not going to take a pay cut. Like, I highly doubt it. You're going to see unemployment numbers have been increasing lately. The last figure, though, did have a large drop. That's why you had silver and gold. Gold broke below $1,900. Now, if we have a look at silver here, guys, I do think silver is potentially could have, bottom, but it could also trend a little bit lower, potentially fall maybe $1 from where it is now down to support. Now, what I want to show you, we also have a bullish divergence here, as I mentioned in that ratio chart for the SILJ. Now, if we have a look at silver, just the silver, physical silver price, or, many you would say it's manipulated. Now, if we have a look at this low that we formed back here before we had this massive rally up to that $26 level, you can see there was a bullish divergence here in the RSI. This is on the daily time frame, whilst we made a lower low in the silver price, right? And then silver went on a massive tear to the upside. Now, silver made a low here, and it's made a lower low in price, but you can see it's made a low in the RSI and it's made a higher low. Just like it did here, it made a higher low, and then potentially we could have some type of bounce here in the short term. Now, it could be negated if we do close below this point in the RSI at around 33 or 32.75 to be exact, and then I would be expecting it to pull back to somewhere around 21.50, so around $1 from where it is currently trading now. But if we do have a look out on the weekly time frame, you do have this long-term support trend line. I'll just turn this on logarithmic chart. Now you can see connect the lows, the body candle closes on the weekly time frame, connect it through all the lows here. If we are to have some type of capitulation wick through this 21.50 area that I do think will hold as support, we could potentially pull back to the mid-range of this channel at around $20.25, somewhere around there. So it's the midpoint of this downsloping channel, and it's also this upsloping trend line. So you have 2 points converge at that same price. Now, if we just add in the Fibonacci as well, just to have a look where it could act as support, going from that September low up to the highs that we made lately, you can see the golden pocket sits at around $21.86. So this trend line could act as support if we chop sideways here and we have one little final flush lower. So anyway, guys, that's my video today. If you want me to make one comparing the JDX, the GDXJ versus the relative price of gold, just like I did in this video, make sure you smash the like button, hit the subscribe button, and I'll see you guys in the very next video. GameX out. Peace.